Hello guys. We continue again with our examples. I'll continue with our series of technical analysis. With this one, we're going to be continuing with supports and resistance. So I want us to look at how you can draw these levels that we are talking about consistently in a consistent way of drawing. So we'll talk about this is on page 9, point number 3. Supports and resistance trading. Key points to note when trading support and resistance. Price will normally move from a level of support to a level of resistance and vice versa. This means that price will actually move like this from a level of support, from a level of resistance to a level of support and vice versa. Now, it will it means price will go down. Look at this. Price will go down maybe like this until it reaches a level of support. Again, we've already spoken about this. We said we, as much as if you're gonna mark like this, sometimes you won't get your reactions like this. But if you're gonna mark it as a level like this, you'll most likely get your reactions. And also with this one here. Okay, this one did give you a reaction. But also, if you're gonna look closely, if you had marked this, you're not gonna get that reaction. If you had marked that price at the top, you're most likely not going to get this reaction here. So it's important to get them correctly. So say in a ranging market, price will normally move from support to resistance or resistance to support. In a ranging market, price will move within major support and major resistance. This is our major support. I mean major resistance, major support here at the bottom. So those are your obvious highs and the obvious low of that range. You can connect another one here. There's another one minor within the bigger range. If we zoom in on the weekly ranging period on CAD CHF, we will see that price is ranging within a major resistance and a major support. Price will most likely reverse once it touches a major level, either a level of support or a level of resistance. So it will most likely react to these points here at the top. Or you have these ones, the smaller ones here. In a ranging market, once price reaches a major resistance and fail to close above it, we can expect a major decline or drop in the currency pair we are trading. Our intended target for the drop in price will be at an opposing level of major support. So if you look at this, these are our obvious highs and obvious lows here that we have marked. Let's see this. You can see price rejects here, it's went up to that. Most probably now it's going to reject and go all the way down to this one here at the bottom. But I'm just going to explain now shortly how to draw these lines like this. However, if price reaches a level of a major support and fail to close below it, we can expect a major rally in the currency we are trading. Our intended targets uh, for the rise in price will be at an opposing level of resistance. So this means if the market is gonna go up like this and reach a previous level of resistance and fail to close above it, we are most likely to get a strong decline or drop in price. Same as if it drops and reaches a previous level of resistance and fail to close below it, we are most likely to get a strong rally. Okay, we might get more retests, but if they all fail to close below, then we might see rally in price. Because this means this area here of demand, this is where you have high buying pressure. That's where you have high selling pressure. So if it fails to break, you know what's going to happen. Within the range created by your major support and resistance, you will have minor support and resistance levels. Ideally, use the line charts to identify your minor support and resistance. So this is your extreme high and this is your extreme low. You used your line chart to get these areas here. Then you have your minor support, these ones. You have another one here. This is where price is playing along. You have other ones here. Using your line chart, look at where price is consistently failing to break above or failing to break below using your line chart. For example, with this one, if you use line chart, you can see that there's something going on around about this price here or this price. There's something going on around about this price here or this or that one at the top. You can see you have this rejection here, that rejection there, you have this rejection, this one. You have those fake outs there. You can also use the lowest again with this. It's now using the line chart, it's actually even easier to mark these long term because you can normally it will have this price here close to this one. See, it's this one and this one. So normally you can just draw a range from that one to this one like this. That's the first way of doing it, of which I don't normally use this one, but it's also a good way of identifying your levels. There is another one here, and if you check with these zones here, with these levels here, you can actually go as far. You can actually go if you look at this. You have this retest. I mean this and this. Okay, this one did not reach this, but if you connect a candlestick, open on the candlestick, you can see it's rejected on this price. With your line chart, it's not showing that it's even reached. But if you go back, you might see that you have so many candles that are rejecting here. There's another one that are not appearing on your line chart. Look at this. Look at this one. Look at these two here. If you draw like this, they are actually reacting to this same price here. Can I even go back in time? Okay, you can't go back. Oh, really? Okay, they even okay. This is daily, but you can see you're getting your rejections on that. Okay, probably not run if anymore. But currently on H4, that's that's one that you can use along with this one. See, can expect a reaction from around there. You can see some are not touching like this one and this one and this one and this one. But if you connect with candlesticks, some of them are touching like with this one. Okay, it didn't reach, but these ones did reach. So that's one way of getting it. You can see there's another one here. This one and this one. See, and you're getting rejections, reactions. That's a reaction. That's a reaction. So as price is going down, you can even zoom them in. There's another one here. Look at these rejections here. Look at these rejections. Look at these rejections. Connects to candlesticks. This one did touch. These ones. Look at this. Okay. This one also touched. So it's like in these areas where you're gonna be looking for those reversals. In those areas where you're gonna be looking for those patterns that you wanna trade. If you're looking for a reversal pattern somewhere in an area like that one, you can even use. So this would have been a nice double top should that been lower than this. It would have been a nice double top. I don't think you had any pattern as you went up to reject. Okay, maybe you did. So it just broke that pattern now. Not a very smooth one. Maybe on this time frame should be showing something clear. Yeah, maybe on this time frame. So it's just broke now. Why it's rejected on that zone there at the top. So that is one way of drawing it. More especially this one is more on ranging markets, mostly on ranging markets. I want us now to look at this one that we're doing here, CAT CHF weekly, and see how price reacted to this was in June 20, 2019 weekly. Price has already reacted to this. It has already moved. So I want us to just see how it reacted to that weekly range. So it's actually this range, your minor support, your major support and major resistance. You use your candlesticks for that. We had that one as the highest. This one is the lowest. This is a ranging market. These are your major. You can see even now it's still reacting to this. You can see even now it's reacting to this. But has it created a chart pattern yet? Looks like it's creating a double top, double bottom, but it's not yet time to trade because if this is a first bottom neckline, second bottom, it should go up and break that, then you can consider trading. But currently, you're still just gonna monitor and see what it's doing. Now, these are your major support and resistance. On the book, I stated that if it rejects, if it tests um, in a ranging market, once price reaches a major resistance and fail to close above it, we can expect a major decline in the currency pair we are trading. So this was our major resistance here. There was a retest here. It's just that I didn't use um, candlesticks here. But if you use candlesticks, okay, this is it. This is how it looked. It looked like this. These are actually the ones that are in between. We had this, we had, okay, up. I want to focus on this. These ones, because you see these ones that do not have any candle touching. These are the ones that I drew using candlesticks. You can't see them now because there are no candles touching. But if you open on MT4 and change this, okay, let me do like this. Okay, let me just quickly do this. So we had these here. This black line here at the top, major resistance and major support, are the ones that you draw using your candlesticks, your wicks, highest wicks. You can make them a zone. How do you make them a zone? You look at this where you have the highest wick, where could be this. You can also use this one, but I used this. Then you look at this little consolidation that is happening here, or not this little range that is happening here, the spacing that happens here before that drop. And then you mark all these candles that are here, but you do not use the wick like most people use wicks, but I use the lowest here on the basing, this, 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 then excluding the bottom wick. So just mark it like this as a range. If you want to mark it as a range, that's how you can do it. That's where you can look for your patterns, double top, double bottom. If you are looking for that double top here at here, the top one, top two, neckline break sell, all the way down to maybe this. Same as this one. If you want to mark this as a range, you have this strong candle going up. Look at this base. There's a drop and there's this base here, that pause here. Then you can just take that body here and mark it as a range. That's your range here. Do not mark the week at the above week. Okay. So at that time we had these two. Then I marked, because it's arranging markets, I marked this one and this one. Sun is out. So this is what we had. And now you can see how price is reacting. Still reacting to the same. We say once it's reject on a major support, as you can see on a major resistance, it will drop all the way down to your major support in a ranging market. You can see it's broke below this minor supports that we had, came back, retested, didn't closed above, but it didn't actually break because it didn't move away. We'll talk about the nature of a breakout. But this is not a breakout. This is a fake out, came back. Okay. But at the time of the writing of the book, it was still here, which is just below that consolidation, just below these minor support resistance that it was creating. So it was just somewhere here where you had those minor. See, if you wanted to draw this, you can see you have something here, and it's also with which one? With this one. This and this would have been a good range here. That's a good range, a good level. You get these reactions from these minor levels here. And you can check them as candlesticks. You can see these just rejecting here. So if you're looking for those patterns maybe on daily H4, H1, looking for those chart patterns along this level here, looking for reversal, because you know that price has rejected on a major support, major resistance. It will go all the way down to your major resistance. It's just a matter of time creating levels of supply or levels of resistance, to reacting to them and then drop. So it's this. And then there is another example, or it's okay, it's still the same example. So now this is where I was using the candlesticks to mark them, the major ones. You can see candlesticks here. Then these ones that have these rejections here were actually drawn using these minor ones. These were drawn using line charts. Okay, this one here, I want us to take a look at this because I want to see a reaction to this. It's this one. So it's probably like here, second from that one. I think this was it. Yes, it's this one. You can see it gave a false breakout and then gave you the two breakouts from that support, and you can see the drop, strong move going down. That's more than 350 pips. That's 500 something pips. As mentioned above, in a ranging market, price will move from major resistance to major supports and vice versa. Within the range of within the range formed by major support and resistance, minor support and resistance levels will form like these ones. This one was just going back to retest. There's another one here that I was supposed to draw using a line chart. Support and resistance golden rules. A golden rule we already know: you do not buy near resistance and you do not sell near support. You don't. There's a resistance here. There's a resistance here. You can't buy as price is going up. We can't buy near the resistance that has formed here. And as it approaches this, as much as it broke, but as it approaches, you do not sell. Maybe as it breaks, you sell all the way down to this, and this one breaks, you sell all the way down to this. Why can't I sell near support level? When price is at or approaching a support level, will not consider taking sell trades unless price manages to break below and close below the level with a true breakout candle, to be covered in the following chapter. I still want to talk about your true breakout candles. Support levels tend to push price up if they are not broken. That is why you will not buy at a support level, because if they are not broken, they will tend to push price up. We have this one here, which was not broken. Yes, it did it did went below, but it didn't break. But what did it do afterwards? It pushed price up. If they're not broken, they tend to push price up if they're not broken, as you can see with this one. This is where we expect a bullish reversal in the markets. It's where you expect those moves up in the markets. As you can see, we got a bullish reaction on that um, support that we had there. For this reason, we'll not consider taking sell trades. Okay, we will look for buy trades once the support level has confirmed to hold, with the hope that price will rally. So you can look for buying options going up. Why can't I buy near a resistance level? When price is at or approaching a resistance level, we need to consider take we will not consider taking buy trades unless price manages to break and close above the support level of the true breakout candle, which we're still going to talk about. Resistance levels tend to push price down if they're not broken. So like this one that I just talked about. As it goes up, we don't look for buying trades going up because we are approaching a resistance level which normally pushes price down. That's what we're going to be looking for. Sell positions. Oh, this is what I'm talking about. Sorry. As price is going up, we do not look for buying trades. This is where we expect a drop. And as it goes down, we do not look for selling trades. We look for buying trades because this is where we can expect a reaction or a rejection on this. Looking for those sets, we're looking for those chart patterns, reversal patterns. Okay, okay. So now for this where okay, this is where we can expect bearish reversal in the market. For this reason, we'll not consider taking buy trades. We will look for sell trades once the resistance level has confirmed to hold with the hope that price will drop. This is another example of what we are talking about. Now, I want us to take a look at this, and this is where we're going to stop for this video. We had this as a support, as a resistance at the top. We have this as a support. You can mark this as a range. How do you mark this as a range if you want to mark it as a range? Now, this is actually that what we had at the time of this analysis. This is actually what we had at the time of the analysis. So I'm saying you could have marked this as a range. You can see there's a rally, then there's a base, then there's this drop. If you want to mark this as a zone, just take this whole consolidation here and mark the lowest body there. You can see you got a nice reaction to that. Then at a later stage, it's broke above. So now I want us to talk about this. We said you had A here, which I say you could have drawn as a zone. As seen on figure 1.10 above, this is 1.10, price tend to reverse when it reaches a level of support or a level of resistance. With such information, we can filter some of the trades we would normally take. We'll now lean on trades that are high probability, far from support for sell and far from resistance for buy. Looking at the figure above, we wouldn't consider buying at B because price is near resistance A. So this is B. When price was going up before it reaches here, this is where this is not where we would be looking for buy trades. We would actually be looking for sell trades. Draw this as a zone as soon as it reacts to this. Look for those chart patterns, but we're going to talk about that at a later stage. So we can't look for buying options as price is going up here at B. That's where we'll be looking for sell trades because there is that resistance. We wouldn't consider buying at D because price is near resistance B. This is D. We wouldn't consider buying here because it's near resistance B. Same as this, when it approaches this, you won't be looking for sell trades here because it's still the same, are still around the same range. We wouldn't consider selling at 2 because price is near support 1. This is 2 here. We can't consider selling here because this is close to this 1. Now, this is what I want us to look at. 2, this is 2. 2 is actually this. This is 2. Okay, this was 2. We cannot sell here. Okay. Um, this couldn't sell here because it was close to that. Even now, this is 2. When it pulls back to this, we still won't consider selling here because it's still the same thing. They pulled back again to that, but we still wouldn't consider selling here, even with the current price. Even at the current price, still rejecting to that same old minor support there. You can also mark this as a range if you want to mark this as a range, like I was like I was saying, that's another range here because you can see you have those strong moves away from that. Okay. We wouldn't consider selling at 5 because price is near support 4. This is 5. See, you can't sell here because you're close to that. We wouldn't consider selling near 5 because 4 because we are price is near 3. So this wouldn't be a good one because it's near this. Actually, this would have been a range. That's a reaction to this. Can actually go look for those chart patterns close to this area here. So what do we do? We will consider selling at B because price is near resistance A. So we look at B and we look at resistance A. Okay, B is this. So we would consider selling here because we are close to A. We would consider selling at D because price is near B. D, we would consider selling around here because price is near that resistance. And if this is also a resistance, you would also look for selling trades here going down because it's close to another resistance that is formed there at the top, of which price did react to it. It was actually this. No, but it didn't reach that. Didn't reach, but there was a reaction going down again. But it was close to that. So you wouldn't consider buying close, you would consider selling. We would consider buying. We would consider buying at 2 because price is near resist support 1. So 2 is actually this one here. We would consider buying around this price, of which that is where it is currently at. See, that's where you would consider buying. In fact, that's another double bottom here. Neckline break there. Can look for those buying options going up probably to that high. And lastly, we would consider buying at okay, we would consider buying as 5 because price is near 4. Okay. 5 is this because we are close to this, and we would consider buying here because we are close to this. So that's how you would actually look for those reactions. That's how you don't trade against the closest support, closest resistance. So that will be all for this video. And on the next one, we will be looking at flip zones. Thank you for watching.